Welcome. I wanted to put together a quick video for those investors that are buying homes with the intent or purpose to resell them to an owner-occupied person, or a retail flip, sometimes they're called. There's a misconception that RentFax is strictly for the use of long-term hold rental property, and that's not accurate. As a matter of fact, many of our clients are not property owners themselves, but property managers, lenders, insurance companies, crowdfunding, hedge funds, anyone that touches real estate investment property, whether it be for flipping, long-term hold, or other purposes. So I'm going to quickly walk through 4 examples if I was a flipper of some critical pieces of information you'll want to be aware of, because despite the quality of the asset or the home and the amenities that you put into the home, that if the home is located in a neighborhood with a demographic that doesn't support your end strategy for investment, despite all your efforts in creating a beautiful home, the audience will not be there to support your success. So on this first property, what we see here is the first page of a risk detailed report. As we can see, the score is in the lower or end of the stability spectrum, below 20. So as a rental property, this indicates a low likelihood of income stability. But as a flipper, what does this mean? This particular location was of interest to me because the home was a new build, and it was a beautiful looking home, very reasonably priced. It had a lot of positive attributes to it, but when reviewing it, what we discovered and brought to the attention of the prospective investor is a fairly critical makeup of the neighborhood. That being that the predominant housing type in that neighborhood was apartment complexes and not single-family homes. And so the audience of which would be attracted to that demographic for a single-family home purchase may be lower. This next example is a property that scored a 32, so we are moving up in the risk index. And we can see when this particular property is located in Fort Myers, the prior one was in Houston. But as we look at this 32 score, we can see that there's more of a blend of single-family homes, so that's good. So there will be a higher audience of potential homeowners or single-family homes. And we also want to pay attention to the occupancy of that makeup. In this particular case, just short of 2/3 of the population in this neighborhood are owners of their homes versus renters. So we're trending in the right direction if our exit strategy or investment strategy is a flip. So this particular property in Texas scored a 40, so we continue to move up into the spectrum to the right. And we come and we look at some of our favorite statistics I like to look at for flipping. And here we see even a stronger composite of single-family homes. And again, we see a strengthening of ownership as compared to rentals. This particular neighborhood is a great neighborhood to go in if your strategy is a lease purchase. Or I always hear flippers say, well, if I can't sell it, then I'm going to rent it. Well, that only works if you're in a neighborhood where renters are interested and where renting the property is financially feasible. So in this final example, I wanted to show you a situation where it was a great neighborhood for as far as being very stable and attracting owners, this particular one being in Georgia. You can see it's scoring in the dark green and the 80s. And what we find here is that we have a strong concentration is single family homes. So that's good if we are flipping this single family home. And the corresponding ownership rate in this particular neighborhood was strong as well at almost nearly 90%. But look how low the renter percentage is at 10%. So in this particular neighborhood, in the event that the flipper says, well, if I can't sell it, I'll rent it or move into a lease purchase, the likelihood of attracting renters to this area in a financially viable situation or financially feasible, meaning that you wouldn't be in a negative cash flow situation, drops. So as a flipper, I can use RentFax and the risk index to help make better decisions of the neighborhoods that are optimal for my strategy, avoiding high quality assets in neighborhoods that have demographics that don't support or attract homeowners, as we saw in the first example. Or in the next two examples, we saw neighborhoods that would support potential homeownership, but also could offer good options for lease purchase or renting if the property didn't sell quickly. And the fourth and final example is a strategy where your sole and dedicated purpose is to sell the property. So if you're a flipper, I hope you found this short video helpful in how you can use RentFax and the risk detailed report to help guide better decisions.